Hello everybody, welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today I am going to be talking about Intel stock. Today the stock price imploded after they reported earnings. Let's see intraday where we're at, down 26%, down to nearly $21 per share. I have made a video on Intel in the past. I've written on Intel in the past. I've owned Intel in the past. And I wanted to take time to make a video where I talk about some of the lessons that I think investors can take away from what has happened to Intel. Because I've seen a lot of these mistakes. Since I do this every day for a living, I interact with a lot of people. So I get to see kind of some common errors that where I see quite a few people making. And then since I was involved in this stock myself, and lost money on it, I should say, which I'll talk about in a second, I think I have some insight to share about kind of the difference between an average, or maybe even between like an average individual investor and then an investor that's just kind of like gotten above average, like, and has some experience, and then learned from some mistakes that they've made in the past. So I think it could be a really kind of instructive moment here with Intel stock for those folks that lost a lot of money today and over. I mean, the stock peaked at nearly $70 a share, so it's down a lot from where it was a few years ago. As always, this is not individual investing advice. This is just how I analyze stocks. So let's start with kind of my history with Intel personally, and then we'll get into some of these lessons really quickly, just as some background here. I bought Intel on this dip in 2020 on October 26th, so about almost right at this bottom here, around $45 a share, which looked initially like a pretty good buy. If you look at their earnings on the fast graph here, you can see earnings were still holding up quite well. And they continue to hold up well for another year after I bought the stock. And initially, I looked pretty smart, and the stock price did what I thought it would do, and it was up like 50% in a few months, right? So that looked like a pretty good value purchase at the time. But what happened was, as you can see, this dark green shaded area in the fast graph represents earnings per share. I do have a 25% off link for fast graphs down in the description if you want to go try that out, and you can get a discount if you've never tried it before. So if this look, I use it for a lot of analysis, not every single analysis, but it can be good for stuff like this one, earnings matter. So let's back up this earnings chart so I can show you what I was thinking when I bought the stock. Now, Intel is in the semiconductor industry. It's almost always a cyclical industry. But Intel is now, there were some earnings cyclicality back during 2008 time period, but moderate earnings cyclicality is normal when you have a really bad recession. So they weren't any more cyclical really than like your average business. Now, if we went back to like 2000, which the fast graph doesn't go back that far, Intel had never recovered the highs that it had back in the stock price highs back then. That's how big the bubble was. So I made a choice to kind of reset things after that bubble was completely burst, starting, basically when this chart starts around 2004 or 5. And when you take a look at this, they had steadily rising earnings per share, moderate cyclicality. So you could kind of treat it like a normal business, basically, that wasn't super cyclical, even though it was in an industry that's normally very deeply cyclical, right? So if I was to put up, I don't know, like Micron, or we'll just look at Micron real quick. So this is normally what you would expect like a very traditional semiconductor business to look like. Deeply negative earnings and down cycles. Even though we have this secular growth trend where earnings are improving over time, which is really good, they still experience these deep drawdowns, right? So Intel had kind of bucked the trend on that. So I decided not to treat it as a deeply cyclical business when I bought it here in 2020. But what turned out to happen is, as time went on and we saw earnings completely collapse, so that basically destroyed my initial thesis, right? And when that happened, I eventually sold this stock on the end of January 2023 down here at like $28 a share. I took like a 35% loss on the stock. So, and the reason I did is because it was clear that earnings before hadn't been very cyclical for the past 20 years, we'll call it. But now they were. And so one of the things that I learned partly by owning Intel was that really, or that I assumed, and this has still been my running kind of case, is that what happened was AMD basically started taking the less cyclical part of Intel's business away from them. And as that happened, Intel became more like a normal semiconductor stock, and AMD became a little bit less like a normal semiconductor. So they're kind of switching places, sort of, earnings like just structural earnings wise. So what happened was I actually bought AMD during this dip here in 2022. I still owned Intel, but I had really, partly because I owned Intel and I was trying to figure out what was going on and why, I was losing, why earnings were falling and everything like that. That's when it came clear to me that AMD really looked like they were taking their business. So I bought AMD, and I wrote an article on this. I didn't have the YouTube channel back up and running then. But I basically picked this bottom with AMD. And then it was up like 120% or so, and then I sold half of it, and then I kept the other half, partly because of this Intel thesis, right? Because while normally I would have sold all of it around here, wherever it was right in here toward this initial bump, but I thought, well, if they're taking that business from Intel, they'll probably be less cyclical than they had been historically. So it might make sense to hold on to some of this as just a longer term secular growth play. So that's what I did. And it's worked out, pretty decent. Now the stock is coming back down because cyclicality hasn't gone away. It's just less cyclical, right? So kind of meeting it halfway ended up so far being a pretty good move. But the main thing was selling Intel. So I want to talk about kind of 4 lessons here that I think investors can learn, that I saw investors making this mistake with Intel. Now, I made one mistake with Intel. I assumed that it would continue to be less cyclical, and it wasn't, right? So that was my mistake. Once I recognized that mistake, I sold because my thesis was, in my mind, proven wrong. You could look at the earnings. I had a full year of deeply negative earnings when I sold. So there was evidence there. It wasn't based on feeling. I didn't keep holding the stock because I lost money on it. I just took the 35% loss and, lesson learned, right? And in some ways, I applied that lesson to AMD, so I was able to make my money back and then some. Now, of course, it would have been better if I didn't own Intel to begin with, but maybe I wouldn't have been as attuned to kind of what was happening with AMD if I hadn't owned Intel. I think that's probably the case, actually. But the first thing I noticed is there are a lot of people that were holding Intel for the dividend, especially, or even buying it down here. So before they cut this dividend, they had like a 5.5% yield. Lots of articles and videos about Intel's dividend and how great it was going to be. I also started getting lots of questions about whether they were going to cut the dividend because I had written a couple articles on it. I didn't really buy this like as a dividend investment, so that's not really the thing that I would think of. But the problem is, you can see that they cut their dividend. Now they've eliminated it, I think was what they announced today or yesterday. So the dividend is now gone. But what I want everybody who focuses on mostly dividends first to understand is this is what happens. So if you have I'm just going to pick like a kind of random point here where they were still paying the dividend, where you might have bought it for the dividend, with like a 3%, which was pretty high back when interest rates were at 0, right? The thing is, the stock price is going to move down before the dividend cut comes. So And this is doesn't have today's drop in it still, so you can take it down another notch. So what was the price up here? $55, and now it's 21. So you're looking maybe like a 60%, we'll call it 55-60% loss. If you would have said, okay, well, they did cut the dividend once before, so maybe when they first cut it back here, you might not have had quite as big a loss, like 40% or something. If you waited and you said, oh, they cut the dividend, now I'm going to sell, right? That was these sellers right here probably. And then when it was eliminated altogether. By the time that happens, the stock, you are deeply, 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 deeply in the red with these dividend stocks. So you can't let the dividend is the last thing to go usually, in at least in the U.S. in this type of environment where dividends, well, people want dividends. That's the last thing the companies try to cut, which is dumb, but that's what they do because a lot of their salary is based on stock performance a lot of the times. And if you cut your dividend, then the stock price usually goes down. And then if you're an executive, you make less money. I think that's the primary reason. Or you just lose your investor base and then, you have activists come in. But either way, it's like a job security or monetary salary thing for these executives when it comes to whether they should cut the dividend or not. Now, if they would have cut the dividend a long time ago and invested money better in the things they should have been investing in, then they wouldn't be in as much trouble as they are now. But so the point is, you can't wait for the dividend before you sell a stock. I wouldn't even let it come into like consideration most of the time. All right, the next thing is you can't let the fact that you're down in a position stop you from selling it, trying to get back to even, things like that. I mean, I had no real, I never really thought about, oh, maybe I could get back to even, right? That's kind of a rookie investor thing. When my thesis was broken, that's when I sold. It didn't matter whether I was down 35%, it didn't matter whether I was down 10%, it didn't matter whether I was up 30%. I just made a video where I sold several stocks. And I don't think any of those, some of them were up, some of them were down. That whether they were up or down or not didn't matter to me, and that wasn't why I decided to sell them. There are a few cases with cyclicals where I plan to sell them when they reach a certain price, a certain recovery in the cyclicality type of thing. So in those cases, I am looking for maybe 100% return before I sell, but very different most of the time. When your thesis is broken, it's a good idea just to sell. Put your ego to the side, accept your loss, and if you can figure out why, and then this is kind of a special case, which is why I wanted to make a video, because the fact that I kind of figured out what my mistake was allowed me to actually make money on AMD. So you got like a double bonus for just kind of accepting that I got things wrong. I would also say don't let taxes determine when you sell something. Now, if you can get into long-term gains, if you held something for 11 months and it looks like you want to sell it and you think you can go another month to not pay short-term capital gains, then okay, that's one thing. That's like a special case. But for the folks that bought Intel, let's say here, right? And they get to this point, I made a video, which I'll play a clip of maybe here in a second, 7 months ago, where I looked at Intel when it was about right here. So let's say you held this whole time, you got an 8% return, CAGR each year, you're up 120%, but you don't want to pay taxes on it. Well, the problem, but you think you should, otherwise you would sell, but you don't want to pay taxes, right? Well, now you're down 50%. Well, I should have marked where I picked that, but I mean, now you're negative. I guess with dividends you might not be, depending on when you bought it, but now you basically have a loss. You lost, like, it was $46 per share when I pointed it, and now it's 21, right? So now you've lost, right? Okay, you didn't pay any taxes, but you just lost more money than you would have had if you just paid your taxes and found a better investment. So now obviously there's uncertainty that comes with some of this. A person might not know when something's overvalued enough to sell, and then taxes are certain to some degree if you have to pay 20%. So there, it's not super easy, but I try not to let the taxes influence. I wouldn't prevent it ever from me selling a stock that I thought should be sold. Let's put it that way. And then last lesson is, it's a kind of a combo one. One is try to figure out if your thesis isn't working out, spend some time and really look at like, what are the bears saying? The bears on my article were telling me AMD is eating Intel's lunch. They told me that in 2020 when I bought the stock, and I was like, well, maybe, I don't know. I mean, I didn't push back really because I didn't really know, but if you listen and then you see the evidence for it, watch competition and see if things are changing, and there's somebody out on the internet that understands what's going on, even if you're not like an expert in an industry. And if you take the time and kind of consider it, and then once I had got the evidence when earnings fell like 60%, then it became pretty clear, right? So that they were right, and we're still going on. This story is still unfolding in that direction, right? It hasn't changed yet. So those would be the main things. Now, in my last video, I'm going to see if I've never done this before where I tried to actually play a clip of a previous video. But you can see, interestingly, so I sold like down here. So I looked pretty dumb, like as the stock had risen a lot since then. It went from like 20 something to, it was probably up like 40% after I sold it. And somebody asked me about Intel, so, I made the video. But this is kind of what I had to say here toward the end. Before we're going to find out how this really all works out. So for me, Intel is just an avoid right now. If I was a person that bought it down here, and was up significantly, I would take profits. I mean, I don't know what the stock price is going to do. I have no idea. But, for me, if you get into like long-term capital gains territory and you've owned it over a year, or you have it in a tax advantage account, if I did, and I had this pop when it's very unclear how long earnings are going to take to catch up to this price, that looks pretty expensive to me. I would take profits and maybe look for another semiconductor cycle and find, buy a more dependable one on a dip. So I liked looking at that because it made me sound smart. But, that was right here. And then after that, the stock price fell back down. Now, I didn't say that, sell Intel. The price is going to collapse, because who knows what the market's going to do short term. But you can kind of see when things look a little too optimistic. Now, they could stay optimistic for a long time, and maybe earnings would have come in a little bit better, and it could have kept doing that. But the risk reward, you can kind of see how it shaped up there. So rather than me saying, I was dumb, I shouldn't have sold back here, in January, and now the stock went higher. Well, just because the stock went higher over the next 5 or 6 months doesn't mean that the thesis was necessarily wrong. The market can take a while to judge these things. And so all the things that remain that were in place when I sold were still in place when I made that last video. So there was no reason for me to really change my mind. I mean, analysts thought earnings were going to be, they didn't think they were going to be as bad. So 2024, they had at 189, and now they're at 29. So they thought things were going to be better, but it hadn't actually happened yet. So you can see how far off the analysts can be sometimes. So they ended up being wrong, and then the stock cratered. The evidence that Intel had turned things around hadn't materialized yet. So there really wasn't a reason to feel too bad about selling. And even if I did, it still would have been very cyclical. So if we would have had a cyclical rise, that could have explained, kind of Intel's, which we haven't, well, in AI we have, but Intel's not really in that space very much. So in normal semiconductor world, things are still pretty bad. If you're not in AI, if you're not in the AI stuff. So hopefully those are just some lessons that can be applied throughout a person's investing career, I think. And they aren't easy. I mean, it sounds easy when you look back, but in real time, it's not always easy to rationally kind of determine what makes the most sense and what doesn't, and then to take action on it, right? Um, so yeah, that's hopefully that helps people. If you found this useful, hit the subscribe button. If you have any requests you'd like me to take a look at, let me know. Someone did ask about Intel, and with a huge drop today, I just thought it would be worth kind of going through, what I thought about it. Now, in terms of what I think about it right now, because I'd probably make this video and somebody would be like, you didn't tell me what to do with Intel. I feel exactly the same way that I felt when I sold it last year and a half ago or whatever. I don't think we know when a recovery will happen. So it's impossible to really know what price to pay for the stock, and it would just go in the too hard category. For me, it could go to single digit. I mean, who knows? The bottom is really difficult to know when things are going really bad for us. I would treat it as a cyclical business. So for me, just put it in the too hard category. There are a lot of other semiconductor stocks that a person can invest in that are more dependable and predictable right now than Intel. So there's just no need to try to pick the hardest ones. You just don't have to. All right, so my final thoughts. Thanks for watching, and I'll see everybody later.